Hey everybody, are y'all still awake? Had a very, very contracted, compressed volatility market. So we're right back to where we started at the Globex Open and didn't get too far. 6,000 was the winner chicken dinner for the resistance, just under 6,000. The SPX 6,000, or a little bit lower than that actually. Didn't even quite get to 6,000, but there is a 6,000 call wall that's very strong. So this 59.92 daily one was pinned for the SPX. So we're just waiting for that non-farm payroll. Nobody is selling the market, which is good. So I want to show you, while we've got, a lot of downtime, something that we can do with Jats PT that you may not be aware of. So I'm going to put a blank chart up. Okay, we'll do with ES. Put none. And I'm going to put a 30-minute time period to match the TPOs. So I need to fix my wallpaper so that it populates a black chart. Okay. So today is the 4th day of the month. We can do a term structure of 4 one-day periods by applying Jats PT to the chart. But instead of getting a 1-day period, we can do a 4-day period. So we can do a 4-day on the open. Look at that. And a 4-day on the close. I use my calendar days to get the dash lines up. Change this to 4. And they'll put a dash line. And the difference between the dash close and the solid open is where that particular 4-day period was there a spread between the open and close. And the dealer algos will trade to both. But you can see that we're inside the 68% of this 4-day period on the open and close. And that means that we're in balance of the overall range for ES for a 4-day period. Now, when you add the 1-day, you can compare the 1-day to the 4-day. So let's put a 1-day open. And I'll add a 4-day close, or excuse me, a 1-day close. I don't know, I'm thinking, okay. 1-day close. I don't need fibs. We're in very low volatility. All right, so I've got my 1-day and 4-day. So here we go. You can see that the 1-day matches the 4-day one. So that double insulated our resistance. Does that make sense? And then we are just inside the one. But of this 4-day distribution, we did not get outside the one. So tomorrow, I would want to do a 1-day and 5-day comparison because tomorrow is the 5th. Now, if you look at your calendar, though, we're only 2 trading days into the week, Monday and Tuesday. So if you're really interested in this term structure idea, which I am, you can add a 2-day distribution to your 1-day and 4-day because you actually only have 2 days of trading. So I'm going to add a 2-day open, and let me put up a calendar day close. All right, so I've got a day 2 close, a day 2 open. We'll add those. And you can see that we actually had a little bit higher that we could have gotten to within our total term structure 1, 2, and 4. And you can compare the ES to what the RTI or the NQ or any other market you want to. Where's my NQ? Let's just take a look at NQ real quick. Um, so you can see that the NQ is also within its 1, 2, and 4. So if this, and then you can also go back and compare the NQ to the ES. You can compare the YM to the ES. So let me show you what I'm talking about. You can ask Grok to help you with your analysis of the exact skew differences between the contracts, and it can get very specific just using the volatility, where the means are and where the inflection points are going to be breaking on the 1-day or 4-day, and whether there is a low volatility, medium, or high volatility comparing the 1 period R vol to the 14 period H vol. So you can get Grok to analyze your volatility by using the data inside of Grok and get trade ideas of which market may have more room to go. Um, so today it was YM and RTY were better for volatility trades. Well, today wasn't, really good. A good example because this non-farm payroll is coming out and the market is just crushed, waiting for that. And we didn't get the volatility spike. Everything was inside the ones. Here's the YM. I guess we got the little volatility spike yesterday, went outside the one, but definitely stayed inside the one today. Monday, or this May 29th, you can see it went up to the 3 and then came back down. And then here is the RTY. Stayed inside of its ones today also, even inside of the 1-hour IB, the yellow. We got a nice move on May 29th up to the 1.25% of the daily range. So by using Jats PT, you can get some pretty good alpha um, by comparing the instruments and the time frames, and even get these skew charts that I've been getting to show you, you know, which instrument, is showing the most promise. NQ and YM were outperforming ES and Russell. Russell is the weakest of all of them. Well, so the Russell shows a breakout potential here for the volatility. But the YM and the NQ have that cumulative volatility, the MOMO. YM has some catching up to do. They had stuck them, they stuck them in the repo room, collecting 4% while the market went up 23%. It's hilarious. So I would be so pissed if I was an investor and they put me in the repo room instead of letting me participate in that 23% run. But so you can create a lot with Grok by giving Grok our levels that you can generate using Jats PT. And we do it by using the market analyzer. So you can create your market analyzer, putting the RVol points and levels up and down, above and below the open, and the HVol daily points, 14 period, 1 period, above and below. And you can compare that to the 1 day above and below the close, RVol, HVol. And we provide the levels for you. So you're just analyzing the levels that you're getting. You just right click and export, save it, and then upload your CSV to Grok, and it can do all of these analyses for you. And it's amazing. You can even get it to do a probability distribution chart. So let me show you what that looks like. Let me see what it gives me. I just asked them to generate the ratios for the 4-day and 1-day RVol to HVol. And it will start running the calcs. And generate the probability distribution. It just takes a few seconds. Here it goes. So it's really cool working with Grok using the Jats PT levels. The important thing is you've got the Jats PT levels, which is key. It would be like garbage in, garbage out if you just use any levels. You really do need to have something that has been shown to map the market. Now, on Grok, it didn't give you the preview of the code, so It needs to do that. You could actually, copy and paste this into Chat GPT and it would render the chart, but we can ask Grok to render the chart. Oh, no, it's not going to do it. Okay, hang on one second. Hang on a second. It's going to be particular today. Here it goes. Well, so you can ask it to render the chart. It's thinking. Um, Two probability distributions of 1 day and the 4 day R-vol H-vol ratios for ES, and shade the area of the daily one, which would show us where the inside, the 68% of the range is for that time period. Because the dealer will keep it inside that one period, not one period, sorry, the one standard deviation of volatility, usually 68% of the range. Let's see what it gives us. For some reason, I guess it's having a bit of trouble today. And it's still not giving me the preview. So wait for this to finish. It's giving me a bunch of zeros too. I don't understand that. So, all right. Well, let me kill this. See if I can get it to read. No. I don't really like it changing my values, but I'll be more specific with it when I'm talking to it. I've got specific instructions that I've worked out for it to do the calcs that I've got a template set up to conduct the calcs for myself. But it's something definitely that you would want to, consider working with, and taking a half hour, an hour out of your day and playing around with Gronk to get it to draw these um, charts for you, and also show you uh, its analysis of the range. Something definitely that I think does lend alpha. And while we're waiting for this chart to populate, just looking at your screen to see where you are inside the distribution. I mean, we're right in the middle of it. Um, can help you figure out those imbalances. It's like right here, didn't go far to get to the two, did it? It leaves the one, it goes to the two. Um, see, that two is from this one way down here. If it leaves the one, it goes to the two. So yesterday it went from the 2-day one to the 2-day two, and it was the second day of, or I guess, yeah, it was the second day of trading yesterday. It absolutely was. It was the second day of trading, and it went from the 2-day one to the 2-day two. So how is that? You can see that it actually gave you the resistance and the target by doing the term structure. So it was just outside the one period one, but it went to the 2-day two. I mean, it's exactly the example that I wanted to give you. And here's the 1-day to here, where it left the 1-day one, the 1-day one, and went to the 1-day two. So it went from the 1-day one to the 1-day two. Then it went from the 2-day one to the 2-day two. So we didn't get the 3-day one to the 3-day two. We stopped out um, at this overall resistance level, which is a higher time frame. We're back at 59.84.75, and that is the resistance. So let's check Grok and see if it's finished. Okay. Here it is. I want a chart.js line chart. There you go. All right, back to the drawing board. It'll just take this a few more seconds to generate. But once it finishes loading the chart, we can ask for a narrative description of the chart, and it's really good. Um, so hopefully this will finish sometime in the near future. We'll come back and take a look at it. In the meantime, I had asked ChatGPT to do it, and it was really quick. So it ran my 4-day distribution here, and at the one, I guess the 4 days in red and the 1 day is in blue, and it didn't give me the point. It gave me the point range, but not the levels. So I need to ask it. I need levels on the chart, um, price levels. There we go. See if we can get this regenerated more quickly than ChatGPT for some reason is acting like Grok is acting like it's stuck in the quicksand. It's usually much faster than this. Um, and it's having trouble. I can download this, actually copy it and put it into ChatGPT and get ChatGPT to render it. So here's their version. He still didn't give me the price levels. Let's see what Grok's version did. I do this a lot where I'll use ChatGPT and Grok together. But it really makes it handy to analyze these periods, and using the term structure in this way. I'm glad you got to see that where it broke the 2-day one and went to the 2-day two. It really works. I mean, the market is so mapped to my structure. It's uncanny, but really gives you an idea of the balance and imbalance in the market. And come on, almost done. Ah, it's all messed up. Your scale, the scale's off. I have a template that I use, and just giving it raw numbers like this, it's struggling a little bit. Um, so I'm asking it to just use the R vol to H vol third deviation to the third deviation above and below. and it's still not scaled right. So eh, I need to work with the templates off. So I'll run my template and load it for the subscribers. But once you get this down, it is really amazing the inflections between the R ball H ball, and you can get it for the 1 day open and close inflection, the 1 day H ball R ball inflection. You can get a 1 day 2 day, or a 1 day 3 day, or a 1 day 4 day, 1 day 5 day. You can do a 5 day 20 day comparison. You can do quarterly if you wanted to go even beyond and see where you are in these distributions. There's a lot that, I mean, there's not much you can't do with NinjaTrader and with Chat GPT and um, Jats PT. So, where's my chart? Hang on one second. I want to show you it works on stocks. Here's UNH, United Healthcare. So you can see it works on the daily time frame. Here's the weekly. You can see it's right in the middle of the weekly range. It got down to the end of the 2 times the weekly range on that sell-off May 14th. Then it has stabilized. The monthly was held by these tails. So here's the monthly 3, and you can see here was 1.25, 1.5. So 1.25 of this monthly range here is what caught. So it went from this open to the close right there, the spread. You can see that the tail stayed in that spread, just making the hair on the back of your neck stand up. It should. I mean, this works for stocks and everything. So there was your tail, and it finally broke out of this tail today for the first time. It had been in there. This shifted lower. I mean, it makes it look like 3 days ago it broke out, but in actuality, yesterday it was still below it. The distribution shifted lower, or it allowed the price to become above it. So that allows for the lift. We can go back up now. So you've got a floor here at 293.40. What was resistance is now support. So isn't that cool? And then you can see here you're right in the middle of your quarterly range. So here was that quarterly, 1.5 times the quarterly range. And now it shifted, the volatility shifted. And this volatility shift is why the market didn't sell off today. So you had your ISM non-manufacturing negative for the first time, like 1/10%, but the market didn't panic. It didn't sell off. And that's because the volatility has shifted. We're going higher. It's just volatility, a lot of it. And once you wrap your head around this, you see how oversold we've been. It's ready to come back inside on this daily chart. So at some point, we're going to get Warren Buffett's people out of the repo market and back in the equity market where they belong. All of that money is sitting on the sidelines collecting 4% interest. It's ridiculous. They've got to stop. I don't know what kind of game is being played. I guess they need them in that market for some reason. Maybe he's doing a rescue package to Powell for whatever you know, machination they're doing in the financial markets, but to support the MMF money being where it is, but that we need it back in the equity market, because these, United Healthcare, that's our healthcare system. That stock shouldn't be selling off 1.5 times the monthly range at the beginning of the month. That needs to come back inside. I mean, what are they going to sell it off to 2 times the monthly range going right away? I mean, down to the monthly 3? It's ridiculous. There's no reason to be selling these off. It's so oversold. This needs to come back in. And the volatility shifted. We're back above it. So it's time to turn the green light on and get them back engaged. They're not engaging yet. Um, so, but you can see here that it works beautifully. This is a 1 day open and close. Um, it trades very well on the 1 day range, giving you an idea of like the level to level that it trades to. And so, like I said, this works on crypto stocks, commodities, copper, gold, crude, or the equity indexes. And then you can use the NinjaTrader Market Analyzer like I do, import it in there. I'm sorry I couldn't show you that probability distribution. I can show you one that I posted before on my Substack, give you an idea of what the possibilities are. I can't believe I can't see it. Oh my God. Now it's saying you can't display images, and of course it can. So, I don't know what kind of shit it's doing here. I'll have to go back and get my template because I tell it to do something specifically and it renders it. Let's take a look at the website. Here we go. Looks like this. So this was today's, or this was yesterday's, June 3rd. Let's take a look at today's. Here's today, June 4th. And you can see that 5981 was the middle of this distribution. And we never got to 6,000. And 5951 was my support area right here. So we stayed right around this 5981 basically all day. Where's, yes, there we go. It just pinned itself to that level in the middle of the distribution. So we couldn't get it up to the even to the upper 6,000, and a lot of that again is due to these higher time frames located where they are. I also have a monthly chart that all right, I hit the wrong button. Sorry. Here we go, monthly. That is definitely an old chart. Here we go. So you can see last month in May, we hit that monthly 3 and couldn't go any further. Now we've got room on the monthly chart, but if I add a 30-day, which is another way to do it, with a 1 period instead of a 14 period, so you can see that real quick. Look, there's your resistance. And now it went away, but we have it. We have this one right there, 59.8475. Let me do that for you again so you can see it. So the initial 59.96 popped back, and now this is the volatility. It's fast. You got to, so 59.9625 changed, and now it's 59.8475. And it's a pretty strong level. As you could see today, there's nothing but wicks. Anytime you see that where it's a real strong level and nothing but wicks above it, um, dealers sitting on that. So they're using the 1 period and the 14 period. And they use them on these time periods: 1 day, 2 day, 3 day, 4 day. So this is 1 month. The way I calculate is the number of trade days in the month. If I change this to 30-day, like a calendar day, or 23 days, or 25 days, whatever you like to use for a month, maybe you like to use a 20-day month instead, then you can um, check where these levels are. But usually it's a 30-day or a 14-day for the calendar. And but I do like this 1 month. 1 month one. And the 1 month one, there we go. It did snap. So this volatility is snapping out, and we're stuck with our pin, our 30-day one pin. So definitely play around with your volatility levels. The dealer likes weekly, monthly. I've got a great weekly chart that provides a ton of alpha. Where's my weekly chart? What happened? I'm sorry, I changed some templates around to make it easier to find shit, and now I can't find anything at all. Um, Here we go. Here we go. Put this on a 30-minute. There we go. So you can see the weekly level is at 6,003 and 6,020. So the weekly open and the weekly close on a 14 period. And I need to change my data to 500 days to get the 1 period. There we go. And so now my R-vol is even higher, or that's a 7-day. So if I put a 1 period week, there we go. Look at that. And this weekly will automatically give you the number of trade days in the week. Even if there's a holiday, it will just use the number of trade days. So here's the inside of the week. And once it pops out of the 6003, it gets trapped again at 6020, maybe to 6034.50. And there's a 2 sitting there too, 6031. We have a lot of resistance coming in on the top end. So that's going to have to be a really good non-farm payroll to break the weekly, monthly levels. And but the market is not selling off, you know. It had a chance today. It got a negative ISM, or not non-manufacturing. So non-manufacturing PMI, Purchasing Managers Index. So the GDP report, 4.6%, was so positive that it also offset that negative miss today, the 0.1% of negative growth on the manufacturing. But and prices went up significantly, which is not good. So the market, from the comments that I saw, indicated they were happy with it because it gives Powell the excuse to lower rates, which is what he needs to do. 9 times President Trump sent a tweet out saying the EU has, lowered rates 9 times and Powell's just sitting on them. They want to pay the people to sit in their MMF account so that they could use it at the repo market because the foreign buyers left. And so they have to attract them with interest. If they drop rates, it's going to drop the interest that they get paid. And if the stock market is rallying, Powell's going to be up a cliff, off a cliff with no parachute because, you know, right now he's got people trapped in that MMF repo low interest rate environment. If he lowers the rates, they're going to bail and go back to the equity market or crypto or gold, and he doesn't want that. So I don't know what they're going to do. We need to issue that stable coin, USDC and USDT, and attract the foreign investment back here, but they're not going to do it unless you give them gold. China is offering gold out of Shanghai, and even though they may not ever be able to get their money back or ever see a gold bar, I guess, just the allure of China opening up gold now to retail investors for the first time in history within this last week is huge. So a lot of capital is being attracted there for that reason. So we need to get the capital back here in the United States, and 4% interest is not going to do it. And that's why Powell's not lowering rates. And he's killing our market. He's killing the Main Street. He's killing consumers and um, small business. And he just doesn't care. He needs to have the money in the repo market. And it's a terrible system. So they need to fix it. And I think they can with uh, what I've outlined in my articles. But let's see if they do it. I hope so. We need to do something. But definitely the equity market is outperforming and nobody is selling. You can see that. All right. So use your range, your term. Um, I've got a method of putting the term structure on the chart as well. That is really cool. I don't know if I'll find that template. Don't think so. No. I'll have to resave it. But I did get rid of a bunch of templates that were not any good. But I have a term structure template that I use a lot for the VIX, and it's not on this chart. I would show it to you. I've got sort of a term structure here, um, showing you how low it is today. Here's your weekly, and here's your monthly up here. So that's 23, 30, and 37 days. So if you put the 1 day on here, put this in panel 2, you can get your point range in relation to the R-vol H-vol. So, so today was 51, 103, 144. And as you could see right here on this panel, the bottom VIX, we were at 63. So we got just above the 51 to 63, but nowhere near the 103. Very compressed volatility today. And right inside of its daily range. So that's what this is. This tells us at a moment's glance where we are on the R-vol, H-vol. Look how compressed the SPX is. It is so compressed, it's going to start exploding. Once it starts moving, it's going to really run. It's very compressed. It's like a top. Spin it around, and once it breaks out, it's going to take off. All right, guys, I've got Killer here trying to get me off the computer. So let you go. Thank you. Sorry I couldn't get the chart to work in Grok, but this is what it looks like, and you can generate this yourself. All right. We'll talk to you guys later. Thank you so much.